Hello everyone. Good morning, good afternoon, good evening, depending upon when you are listening to this audio lecture. In the earlier session, I have explained about the differences between tax, duty and cess. I hope all of you would have understood that. If there are no particular doubts about those terms, naturally I have to assume that everybody got the concept of what is the difference between tax, duty and cess. Of course, it's not so important to distinguish them for a layman. However, for somebody who is learning taxation as part of a professional course, such distinction becomes very important. Since if we use certain terms very loosely, that will be definitely taken negatively. We have to use those terms very particularly in the contexts, in the situations where they can be really used. That is the reason, once again, I am stressing on the point for everyone to be very particular about certain terms, at least from an understanding point of view. Not necessarily that every time we will be so particular and we will waste our time in the minor differences between them, but knowing the differences is what is required for everybody. Just for example, let us say if you go to a photocopy shop, not now, I know you cannot go now, we are all in lockdown. Just imagine, under normal circumstances, if you go to a photocopy shop, a photocopy center, and ask for the photocopy of any of the papers that you require, what you will usually ask is, give me a Xerox copy of the paper what I have. Is it not understood by the photocopy center man? Definitely it is understood. And even they also use the same thing. Actually they put boards outside also. Xerox center, Xerox available. But is it technically correct? Then the answer is no. Why? Because Xerox is only one of the companies which manufactures the photocopy machines. But in fact, the machine used by that photocopy center need not be a Xerox machine. Probably it could be a Canon machine or a Panasonic machine or some other machine, Kodak or something else. We don't know. HP, whatever it is. But the point is, we use the word Xerox so loosely that nobody really bothers about it. It's not like a crime that every time we go and ask for any of the photocopies, we say we have to use the word photocopies only. Not possible. We just use it casually. But should we know the difference between that? Yes. That is the only thing we have to keep in mind. We need not really be concerned about the distinctions between these terms each and every time we use them, because ultimately all of them are meaning similar things. Whether tax, duty or cess, all of them are the payments made by public people to the government. In general, we don't have to worry too much about the distinctions. However, we should not be under a wrong impression also that all are same. There is a distinction between them. That's what we tried to understand in the earlier class. So once again, this terminology, the difference between a Xerox and photocopy, both are not same. We should know that. But not necessary that every time we have to use the word photocopy. We may use the word loosely Xerox also, practically speaking. Same way, Income Tax Act, Income Tax Law, both are not same. Income Tax Law is a bigger thing. Income Tax Act is a part of the Income Tax Law. But still, while talking about it, while reading about it, we just casually use both the words synonymously, law and act. So, the terminology has to be sometimes very specifically understood, though not really used in the same sense every time. That kind of flexibility we should have in the brain. However, do we have the facility of this flexibility every time? Can we use the words loosely every time? Definitely that is not the case. There are certain situations where the terminology plays most important role, and if the word just a little bit changes, there is a hell lot of difference between one word and another word. In those circumstances, we cannot casually use them. We have to be very careful in using such terms. For example, let me bring these two words, taxability and tax liability. This is also in reference to the doubt that has been expressed by one of our friends in the group. The doubt was about, should somebody pay tax on pension? I answered it already because I didn't want to elaborate it that time. The answer was yes. Now what does it mean? Is pension taxable, or does anybody who receives pension has a tax liability? Or both same? No, they are not same. That is what we have to be very clear. So the words once again, taxability, tax liability. These two are different words. When I said yes for the question which was asked, what did I mean? I mean the pension is taxable income. It is taxable. That much only. It does not mean anything more than that. In fact, technically speaking, that answer is also wrong, because the question was asking, should somebody pay tax on pension? The answer should be, I don't know, because I don't know how much is the pension. How would I know whether somebody has to pay tax or not? It depends upon the amount that he receives. So technically that should be the answer, because right now you cannot understand that. I just simply answered yes. But what is the meaning of that yes? The meaning of that yes is, yes, pension is taxable income. If somebody receives pension, it is taxable. Yes, to that extent we have to stop. Can we extend it further, telling because it is taxable, somebody whoever receives the pension is liable to pay tax? Then the answer is not correct. If we say yes, then the answer will be maybe. We don't know, because it depends upon the amount of the pension that is received. So the point once again to note is, taxability of any income depends upon the provisions of the Income Tax Act. If any of the provisions of the Income Tax Act tells an income is taxable, then such income becomes taxable. If the provisions of the Income Tax Act tell that an income is not taxable, usually it uses the word exempt, then such income is exempt, which means it is not taxable. That will be depending upon the provisions of the Income Tax Act. Without knowing the provisions of the Income Tax Act, we cannot understand whether an income is taxable or not taxable. Nor can we have a list of all the incomes that people will generate and find out whether it is taxable or not taxable. Such questions, though I answered it yes, I know very well that answer is wrong, because that answer could be different if the amount of pension received by such person is very less. So, whether an income is taxable or not, it is not a yes or no question. It will depend upon the provisions of the Income Tax Act. If the Income Tax Act specifically exempts any income, then only it is exempt. Otherwise, every income is automatically taxable. Since pension, regularly whichever is received, is not exempt particularly by the Income Tax Act, that becomes taxable. To that extent, the answer is yes, that is taxable. Once again, does it make the person liable to pay tax? No, not necessarily. Yes, maybe, possible. All of these things will come, because the tax liability depends upon the amount of the income that is earned by a person, not on the basis of nature of the income. Of course, there are certain natures of income which are liable to different tax rates, but still, keeping that discussion to a later session, let us understand this conceptually, not very particularly. The conceptual understanding of difference between taxability and tax liability has to be very clearly understood. Taxability arises according to the provisions of the Income Tax Act, according to the heads of incomes, whether that income is falling under any of the heads of incomes or not. For example, the question, the doubt that was asked by our friend, pension, under which head of income it falls? We just have to think about it. Is it something related to salaries, or income from house property, or PGBP, or is it on other sources, or is it capital gains? We can think about it. Of course, don't be over smart and say that because I don't know anything about it, I will call it other sources. That is not correct. It is not other sources. There is no asset sold, so it is not a capital gain. It is not from any business or profession. It is not from any house property. So naturally it is a income which is under the head of salaries. Of course, when a person is already in employment with any of his employers, then whatever he receives from his employer, we call it salary, wages, remuneration, whatever the name we call it. But when the same person receives certain amount from his employer after the retirement, then we call it pension. These are only names. End of the day, if you observe, In essence, what a person is receiving is money. In service, if he receives, he calls it in a different way. After retirement, if he receives, he calls it in a different way. So just by naming it differently, it is not going to have different characteristics. So it is taxable whether it is received during service or if it is received after the retirement also. That is why pension, as an example we are taking, is taxable. At the same time, does it automatically make a person liable to pay tax? Will the tax liability also arise because of the taxability of such income? Answer is yes, no, maybe, possible, whatever. We don't know. Because tax liability does not depend upon taxability. It depends upon the amount of income that person has actually received. Because the rates of tax will be applicable separately. We'll discuss the rates of tax applicable to different kinds of SSCs in the coming sessions. But the rates of tax are applicable on the basis of income that is earned by the SSC. Particularly when we look at the pension, since pension can be received only by an individual, there are rates of tax which are applicable to individuals, and up to certain amount, no income tax is payable by individuals at all. And how do we know that? Without knowing the rates of tax? Not possible. So, the point once again to note here is, there is a difference between taxability and tax liability. That much only we have to know now. Taxability comes under Income Tax Act provisions, heads of incomes. Tax liability comes in accordance with the rates of tax which are fixed in general by the Annual Finance Act, or sometimes even prescribed in the Income Tax Act also. So that is the difference between taxability and tax liability. Both are not same. Because in the questions also you have to be very careful. Determine the taxability of the above incomes. If that is a question, it is a theory question. Actually, there is nothing to calculate because the question is only asking whether a particular income is taxable or not. Answer will be yes or no with reasons. If the question says determine the tax liability of the incomes, then the question is a problem because there are numbers to be calculated. So taxability becomes a theory question, tax liability becomes a problem. And imagine if you do something opposite to what has been asked in the examination, naturally we get 0 marks for that. So that is the danger. If we don't understand the difference between the terms very carefully, and not only that, if we don't read the question paper carefully, there is a risk of misinterpreting these terms. So that is why we have to be absolutely clear about distinctions between certain terms. That is another area of taxability and tax liability. I hope that clarifies the doubt which was expressed in the group also in a better manner. But now that the topic has come, let me just give another, I would say, a piece of suggestion to all of you on how to read and understand and how to approach this income tax subject. And what are the things that generally our brain does, sometimes which are useful for our learning process, sometimes which are not so useful for our learning process. Which are useful, definitely already we discussed. Our memory power, we have to increase that. Conceptual understanding, definitely we need to have it, we need to understand. And our reading, very importantly, reading has to be done meticulously. And wherever required, we have to summarize all that what we have read in the form of summarized notes. That means writing also becomes important. Of course, a bit of calculations becomes important. These are all the things that we should do. We should equip ourselves with and we should improve upon. There are also other things what we should not do or what we should try to curtail, try to control. If we don't consciously do that, we will get deviated. What are those things? Particularly when we look at the subjects like taxation, since they are so much application oriented subjects, our brain will always think about the application of it before even knowing the theory. So, I'll give an example. Again, examples are not applicable to the current period of lockdown. Whenever we are taking example, we have to assume that we are under a normal period where we are just walking on a street and suddenly as we are walking on the street, we saw a board related to, let us say, a temple. Say Tirumala Tirupati Devasthanam, TTD has an office there. We saw the board of TTD while we are walking on the road. Naturally our brain asks, of course if we are enthusiastic about it, whether income earned by Tirumala Tirupati Devasthanam is taxable or not. Question comes to us. Is it a genuine question or not? Definitely yes. Is it useful question or not? Definitely no. Why? Because we are not going to be bothered about whether such income is taxable in the hands of them or not. Same way. We just open the television, some IPL match comes. Oh, suddenly we say BCCA gets a lot of income no, from IPL. Whether the BCCA pays tax or not? Genuine question. Yes. Useful question? No. Why should we care? So the point is, when we talk about or think about any aspect of life, wherever we just look around, there will be questions about taxability of certain items. And it is not our job, and it should not be our thought process also, to think about the practical aspects, the application aspects of each of the things that we encounter in real life. I mean, I'm just imagining. I'm not telling the questions are wrong, but what I mean to say is they are not relevant. Imagine my father is a farmer. So naturally I get a doubt whether agricultural income is taxable or not. Imagine I have an uncle who is a doctor, and I would like to definitely know how his professional income will be taxable. This is where the subjectivity of an individual comes, and the student particularly should ideally avoid that. Whatever we encounter, whatever we see, whatever we have around ourselves, we should never ever apply or try to apply the tax laws to that. Till when? Till we first of all have an idea and in fact grip on the Income Tax Act 1961. After we have completed the Income Tax Act learning, after we know already all the provisions of the Income Tax Act, then if there are any questions like that, they make some sense. Because there is some doubt which was not already covered in the Act, so that there is a grey area. Then we can definitely come to know what is the answer for that. We did not even start one provision of the Act. So now if we have these type of questions, we can have, what I mean to say is, hundreds of types of questions. This question is not wrong, I am telling. This is natural to get the doubts. Naturally people will have this type of thoughts. But what I mean to say is, we should curtail those thoughts as long as they are not relevant to the subject we are now learning. When can we understand answers to these questions? Let us say the question would not have come. I am only just once again taking the question as an example, not that the question is wrong. The question whether pension is taxable or not would not have come if we already completed the salaries chapter. But we did not. We did not even reach the heads of income. We are talking about what is tax now. And we did not even start A. And we are talking about writing an essay, writing a book. Sir, should we write a book now? We can write a book, sir. First you learn A, no? Then B, then C, slowly, like that. So once we know the alphabets, then we know the words, then we know the sentences, then we make paragraphs, then we write books. So how to write a book, sir? Now, if I have a doubt, I cannot answer the question. That will not actually give a correct answer as long as we don't know the alphabets themselves. So we are in a very beginning stage of taxation. So whenever questions are coming into your brain, make sure they are related to the topic that we have discussed. So if there is any question related to tax, duty or cess, if there is any question related to why there is one particular cess that I have observed somewhere in the newspaper, then okay. That because that is a topic related question. When we talked about already what is the difference between tax, duty, cess, any doubts in that, any questions in that are welcome. Beyond that, it's natural to have enthusiasm, but what I mean to say is that will be not helping the cause. We will always get ourselves deviated if we always think about the things which are not what we are discussing. It will not do anything harm. Definitely it is always good to have better knowledge of that. However, it should not dilute our original learning process is my only point. So now tax, duty, cess is one terminology. Law and act is another terminology. Tax liability and taxability, these are not same. That is another terminology which we have understood. I hope all of you have understood. Any questions in that are definitely welcome. Taxability is accordance with the Income Tax Act. If Act says taxable, answer is yes. If Act says not taxable, answer is no. As far as Income Tax Act is concerned, it will be only binary, yes or no. Taxable, yes. Not taxable, no. Like that, yes or no. There is nothing may be taxable, may not be taxable, nothing like that. Either yes or no, black or white. It will be like that for many items. Of course, if there is any gray area where the Act is not possible to tell whether something is taxable or not, where it has to be settled, naturally it goes to courts. and courts will take a call whether that particular item is taxable or not. But in spite of whatever the laws that we have, whatever the acts that we have, it is inevitable to have certain gray areas, and in those gray areas, it will not be possible to really look at everything black and white, yes or no. But that is the reason why we have judiciary. The judiciary functions in such a way, particularly the high courts and supreme courts in India, related to the income tax cases, they give judgments. And those judgments will be important to identify whether an item is taxable or not, if, once again, only if the act is silent or the act is not really clear about. If there is a dispute, then only the court will come into picture. If everything is clear in the law, we just have to apply the Income Tax Act. Simple. That is taxability. Tax liability is not that. Tax liability is a computation, and that computation depends upon what is the nature of the SSE and what is the income of the SSE and what is the nature of the income of the SSE. All these three things will be important in order to compute the tax liability. So there is no answer of yes or no. The answer, there will be a number. It could be 0 or it could be negative. If there is a refund that is possible to the SSE, it could be positive if there is a liability of tax to be paid by the SSE to the government. So taxability is different, tax liability is different. So that clarity should be there when we talk about some of the other terms. Now, coming to particularly the other aspect which we should continue to discuss in relation to the understanding of basic terminology is the distinction between direct taxes and indirect taxes. You can go back to the screenshot or the image that was sent to you where the tax, duty, cess differences were there. In the same image, distinction between direct tax and indirect taxes are also given. I think most of you must be already knowing it, but if not also, just quickly we can just go through that. Direct taxes, as the name indicates, are those where the incidence of the tax and impact of the tax also falls on the same person. Incidence and impact both fall on the same person. Means somebody is paying the tax also and the same person is bearing the tax also. For example, income tax, if somebody is liable to pay income tax, he only has to pay that tax. So he is the payer also, he is the bearer also. He is bearing the tax burden. He cannot transfer the direct tax burden on to somebody else. So that is why it is direct tax. So the direct tax is progressive in nature, whereas indirect taxes are regressive in nature. And distinction between direct tax and indirect taxes comes with the fact, in case of direct taxes, the tax can not be transferred. The burden of the tax cannot be transferred. In case of indirect taxes, the burden of the tax can be transferred to another person. That is a distinction. So to look at quickly, direct taxes are those where the incidence and impact is on the same person. Indirect taxes are those where the incidence and impact fall on different person. And direct taxes are those where the tax liability or the burden cannot be transferred in other way. Indirect taxes are those where the tax liability can be transferred. Tax burden can be transferred definitely in indirect taxes. Direct taxes are progressive in nature. Why? Because the person who is having lesser income will pay lesser tax. The person who is having higher income will pay higher tax. So the poor people will pay almost no tax. Middle class will pay very less taxes. Rich people will pay higher taxes. For example, if you take income tax, which is the only direct tax remaining at central level now, that is the nature of it. So it is progressive in nature. Means richer the person, more income he gets, more tax somebody has to pay. Poorer the person, less income somebody has, less tax they have to pay. That is why we call it progressive in nature. As the income levels of the persons increase, the tax burden also increases. That is why it is progressive. So a normal middle class bank employee will pay very less tax. Mukesh Ambani will pay heavy amount of tax, crores of rupees of income tax to the government. So the burden on the richer person is more, the burden on the poor and less rich person is less. That is how the income tax will behave. Now take an example of indirect taxes. Indirect taxes are regressive in nature. Why they are regressive in nature? Take the same example of a bank employee and Mukesh Ambani. Bank employee also uses Colgate toothpaste. Imagine, we don't know that. Who is he? Just an example once again. So the bank employee, the middle class guy using a Colgate toothpaste. Mukesh Ambani also is using a Colgate toothpaste. Both of them are using the same toothpaste daily for their daily rituals. So when they use this toothpaste, when they buy the toothpaste, both of them are buying it at same price. Colgate is not going to sell the same toothpaste to Mukesh Ambani at a double price just because Mukesh Ambani is rich. Not going to happen. So the price at which Mukesh Ambani buys the toothpaste and the bank employee buys the toothpaste or an auto driver buys the toothpaste, all the three will buy the same toothpaste, not the same piece, but the same product at the same price. And the GST component in that, the indirect tax component in that is same for all. Imagine the price of the toothpaste, whatever they purchased is 50 rupees, only an example, and GST component in that is 10 rupees, only an example once again. So the auto driver also paid 10 rupees, bank employee also paid 10 rupees, Ambani also paid 10 rupees. So all the three are paying same amount of tax to the government. Ultimately they are bearing equal amount of tax. That is why it is called as regressive in nature. It is not fair, no? The richer person is also paying the same amount. Poorest person also is paying the same amount, which is not fair. That is why indirect taxes are called regressive in nature. Of course, it is a different story. All the countries in the world, wherever the taxes are there, direct taxes and indirect taxes are balanced in such a way that one of the taxes will not completely dominate the other. Wherever the taxes are there, mostly the direct taxes and indirect taxes more or less will be equally levied on the people. Why is that? If more and more direct taxes are levied, like for example income tax, rich people are levied with a very high amount of direct taxes, income tax. I'm not sure, but I used to hear, I used to read sometimes, long back before even almost we were kids, during the Indira Gandhi regime, they say the income tax rates in India were almost 90% for some categories of people. That's what they used to say. How far it is true and all, it's a different story. But imagine, just as an example, even though it is not a historical fact or not, imagine the income tax rate is 90% of the income that you have earned. And Ambani earns, let us say, 1,000 crores of income in a year and he has to pay 900 crores to the government. Why will he be interested in earning that income, first of all? That will demotivate the people who are earning higher incomes, and most importantly, that will result in brain drain. The people who are capable of earning high incomes will go to other countries where the tax rates are lesser. So higher direct taxes, very high rates of tax are not that good as an argument, one side of it. On the other side, higher rates of indirect taxes are also not good. Why? Because the poorest possible person also has to bear this indirect tax. That is the reason. If there are higher indirect taxes, that will result in higher inflation, and not only inflation, because of that inflation, higher burden on the poor person, on the common man. So higher indirect taxes are also generally not, we can say, suggested. So there should be a balance of direct taxes as well as indirect taxes. That's what most of the governments in the world do. India is not an exception. Almost more or less 50-50 percentage of the government revenue in India comes from direct taxes and indirect taxes. Exactly not 50-50. They change. In 1 year, direct taxes will cross 50%, around 51-52. And indirect taxes in some years will cross 50%, 51-52. So 1 or 2% here and there, leaving that buffer apart. More or less the direct taxes and indirect taxes are collected by the central government of India almost in equal proportions, which means half of the revenue for the central government in India comes from direct taxes, almost half of the revenue comes from indirect taxes also. But that is where we have to be very clear once again. The people who are all talking about I am taxpayer and my taxpayers' money is used by the government, and we see all of this nonsense on television channels also, and a lot of people are so proud that they are paying a few thousands of rupees to the government. As we discussed in the earlier classes, you don't have to be proud to do whatever the duties you are doing. You are doing your duty. You are not doing any favor to the government. As a citizen of this country, it is a responsibility of every person to pay taxes. If somebody pays income tax, he is not doing any ihsan on the government. But still, that feeling will be there because it is my hard-earned income and out of my hard earned income I am paying a portion to the government means I am doing a great job. That psychological feeling will be there. If it is there to that extent, it's not a problem. But now, unfortunately, what is happening? A lot of people are thinking that, oh, I am a taxpayer, so my taxpayers' money is being spent by the government for distributing freebies and for welfare activities, for other purposes, giving subsidies on various products like this. So they are all very worried about how the government is spending their money because they are thinking they are the only people who are taxpayers. But unfortunately, that is absolutely half true. Why half true? Who are all these people who are jumping as taxpayers? These are the people who are paying income tax. And they are ignoring the remaining 50% of the taxes which are collected by the central government in the nature of indirect taxes. That indirect taxes, who is paying? Nobody knows. Because everybody in India is paying. Right from Mukesh Ambani, the richest person of India, to the person who is on the road who doesn't have a home. If both of them buy the same product, a biscuit packet if they buy, both of them are paying the same GST to the government, which means who is a taxpayer when it comes to indirect taxes? Answer is everybody. Anybody, whoever is buying the products, anybody, whoever is consuming the commodities in the country is a taxpayer. But this half knowledge people I would say actually, they think they are the only taxpayers because they are paying income tax. That is half correct. I'm not saying they are not taxpayers. They are taxpayers. Definitely they should be proud of it. They should be happy about it. But they should not think or they should not ignore the other half of indirect taxes which is borne by each and every person in India, irrespective of that person is poor or rich or somebody, whoever it may be. The indirect tax collection that goes to the central government is contributed by 50% of the total tax collections. That is what we have to keep in mind for understanding purposes. So the point of direct taxes and indirect taxes are just to be understood in a very broader level. Particulars we don't need to go now because indirect taxes as a subject when it comes to CA Intermediate we have only GST. We don't have customs duty and other things. So those things will be dealt in final level. And we'll come to GST as an indirect tax syllabus at a later level. But now what are we trying to understand is only at a broader level, at a conceptual level, what is direct tax and what is indirect tax. What are the examples of direct taxes? In India, only one direct tax remained, that is income tax. No other direct taxes are there. And I told already, I'm just reiterating for your memory. Other direct taxes which are removed already. Earlier they were there, now they are not there in India. Can you just recollect them? Check that. That is 1, gift tax, 2, wealth tax. These two were there earlier. Now they are not there. So one and only direct tax remaining in India is income tax. Indirect taxes, examples, customs duty, VAT, GST, like that. Excise duty is also there still on petrol and diesel products. So various indirect taxes are levied by central government and some of the indirect taxes are levied by state government. We are not bothered about state government level taxes. We are mostly focusing on the central government level tax, that is GST. Particularly as an indirect tax, at a later stage we will do that. Once again, to summarize direct tax and indirect tax, in a simple way, for understanding purposes, not to write all these things. What you have to write in the exam, if there is any reference to them, is what is there on the printed paper, not what we listen as an explanation or example. Ambani and all, you should not write an exam. Auto driver, Ambani, Adani, bank employee, all these things you should not write. These are examples. Only to understand, these examples are given, not to write them in the examination. Keep that in mind. Any examples that whatever we discuss in the classes, whether it is face-to-face classes or audio lectures, those examples are only for understanding purposes, not to be used in the examination. So that has to be, care has to be taken there. In a simple terms, in simple way, direct tax is a rich man tax, indirect tax is a poor man tax. As simple as that. Or we can say indirect tax is everybody's tax. Direct tax is only rich people's tax. Those who are earning well, those only will pay income tax. Indirect taxes will be paid by everybody. They don't know they are paying also. You might have had, let us say, somebody is importing these mosquito bats nowadays to kill the mosquitoes and all that. Some of you might have a mosquito bat in your home. You would have purchased it, I don't know the price. Imagine, let us say 150 rupees something. That already might have included 30 rupees customs duty. You don't know that. Already it is paid to the government. So when you bought this mosquito bat which was imported long back from China, whoever was the importer would have paid already the customs duty while importing it, which is an indirect tax, which means you already paid the indirect tax in the form of customs duty to the government when you purchased it. So whenever we purchase any commodity, if any GST or customs duty or any other indirect taxes are applicable on that, that will be already included in the price of that. And we generally will not know how much is the component of that indirect tax in the price of such commodity. That is the nature of indirect taxes. That is why they are regressive in nature, because everybody will bear the same burden. Rich person, poor person, both will have same burden of indirect taxes. Whereas direct taxes, rich people will have to pay more, the lesser rich people will have to pay less. That is the difference between direct and indirect taxes in a nutshell. Also, one more point to just understand when we talk about the direct taxes and indirect taxes. How can we say that burden of direct taxes and the liability of direct taxes are borne by same person? Because the point is the tax liability cannot be transferred. A particular person, and we are calling him what? Nowadays SSE. If an SSE is liable to pay income tax, whose liability it is? It is his liability. SSE has to pay himself. So payment is happening from the SSE. Burden is also borne by SSE only. Both are done by SSE only. Whereas look at the indirect taxes. Who is actually bearing the burden? We. Means common public, whoever is buying a product, we are bearing the burden of indirect taxes. But who is paying it? Are you paying to government separately? Whenever you buy a Colgate toothpaste, let us say 30 rupees you pay to the vendor, 10 rupees you pay to the government. You don't pay anything to the government directly. Who pays? Maybe the manufacturer would have paid some portion, wholesaler would have paid some portion, retailer would have paid some portion. Lot of people in the supply chain would have paid GST according to their liability to the government. But once again, point to be noted, they only paid to the government. They did not bear the GST. Why they did not bear GST? Because whatever the amount of GST they paid to the government, they added to the cost of their production or their cost of the goods sold, and then added profit and then transferred it to the next level. For example, the GST burden of the manufacturer will not be borne by manufacturer himself. He will pay. Who pays to government? Yes, manufacturer pays to government. But will he bear? No. He will transfer that burden to the wholesaler. Okay, again wholesaler will pay to the government. But will he bear? No. He will transfer that burden to retailer. Retailer will pay to the government whenever he sells something. But will he bear? Answer is no. To whom he will transfer that burden? To the consumer. Finally, whoever is buying that. Whoever is purchasing that product or service, they are the ones who actually bear the indirect taxes. But are they paying it to the government? No. Who is paying indirect taxes? Are the service providers, or the people who are manufacturing, or the people who are selling the products. They will pay the indirect tax to government. On the contrary, in the case of income tax, the person who is liable to pay tax and the person who pays the tax to government, both will be generally one and the same. The burden of direct taxes cannot be transferred to somebody else. Somebody cannot say, I have this income tax burden, you pay this. No, not possible. That is your liability. That is absolutely legally, any person who is liable to pay income tax will have to pay, because that is his legal responsibility. Whereas in case of indirect taxes, you can transfer your liability or your burden actually to the next person. So whoever is paying tax to the government and who is bearing the indirect tax, both are not same. Whereas in the case of direct taxes, whoever is paying it to the government, who is bearing that direct tax, both are same. That is a major difference also between direct taxes and indirect taxes. So direct taxes burden cannot be transferred. Indirect taxes burden can be transferred. Direct taxes, the incidence and impact will be on the same person. Indirect taxes, incidence and impact will be on different persons. Direct taxes are progressive in nature. Indirect taxes are regressive in nature. That is a broad difference between direct taxes and indirect taxes. Examples of direct taxes we can easily see. What are the other earlier taxes which are abolished? Those are gone, but now only income tax is remaining. Indirect taxes, there are many types of indirect taxes. Majorly, we will focus latter part on GST. Now let us come to our specific syllabus related to income tax. Now you have to go through the other image which I have sent to you already. What are the components of the income tax law in India? Means, as we discussed earlier, law is a bigger word, act is only a part of that. So what are all the various components of income tax law in India? This was earlier asked as a theory question. So anytime it can be asked as a theory question. So you have to remember these various components of income tax law for generic understanding and memory. And if at all any examination question in theory question is given, you should be able to reproduce these points. But as a student of Income Tax Act or law, we should know income tax law is not only about Income Tax Act, it is much beyond that. What are all the various components? These are all the parts of the income tax law. One, Income Tax Act, which is 1961. Annual Finance Acts, as the name indicates, Finance Act will not be one. Every year there will be a Finance Act. Now we are in 2020. Already in February there was a Finance Act of 2020, which is not applicable for your examination. For you, the Finance Act of 2019 will be applicable. But every year there will be a Finance Act. 2018, 2019, 2020. Like that every year there will be a Finance Act. And rates of tax particularly will be prescribed in the Finance Act. Whereas the provisions of the Income Tax Act 1961, some of them will be amended also through Annual Finance Acts. So original 1961 Act is not as it is. We need to understand the difference here. Some of you would have definitely read some of the old acts in India. Something like Partnership Act, Indian Partnership Act 1932 if I am right. Indian Contract Act 1872. What are we talking? 1932, 1872. We are talking hundreds of years. Long back these acts were all made. You mean to say a lot of changes happened later on? Definitely not. Those were the same acts which are just continuing with maybe minor changes which would have happened in between. Income tax is not like that. Income Tax Act, though it is 1961, namesake 1961, there would have been thousands of changes since 1961 to till now. All those changes will be incorporated in the Income Tax Act of 1961 through an amendment to the Income Tax Act by passing Annual Finance Acts. So each year there will be a Finance Act which suggests certain improvements or amendments to the Income Tax Act 1961. Also suggests the rates of tax related to that particular year. So that is why Annual Finance Acts which are presented in the Parliament by the Finance Minister will be of also very importance in understanding the income tax law. We cannot just only focus on the Act. Act is definitely the core. Act plus Income Tax Act means whenever we say Act means Income Tax Act plus Annual Finance Act also plays a crucial role as a part of the income tax law in India. In addition to this, there were income tax rules which were prescribed. Those are originally prescribed in 1962. So income tax rules 1962, those also will be changed. Those also will be amended from time to time. And those will also to be applied wherever required. We have to apply those rules. And not only that, the CBDT, Central Board of Direct Taxes, sometimes central government directly or sometimes through the board, which is Central Board of Direct Taxes, which is the supreme authority when it comes to the income tax in India. So the CBDT or central government will issue certain notifications or circulars, and all those notifications or circulars are also part of the income tax law, which means they are also binding on the SSEs. So somebody cannot say, I don't care about circulars, I only know the Income Tax Act, I purchased the Income Tax Act book, whatever is there in that act, that only I will follow. Nobody can tell that. Income tax law in India is not only about the Act. Act, which is Income Tax Act 1961, plus Annual Finance Acts, plus Income Tax Rules 1962, plus notifications and circulars, plus judicial pronouncements, or what we can call them as legal decisions of the courts. All of them put together, we call it income tax law. Once again, now you can refer to the old discussion what we had earlier, difference between the law and act. Law is a bigger word, act is only a part of that. Now you have understood clearly, when we say income tax law, we are not referring only to the Income Tax Act. We are referring to Income Tax Act 1961, Finance Act which is passed each year, and Income Tax Rules 1962, and circulars and notifications issued by CBDT or central government. And not only that, the decisions given by the courts, particularly high courts and supreme courts. And one more point to clarify, some of you might get a doubt. or can we go to a local court or a district court for income tax disputes? The answer is no. The disputes related to income tax start from High Court. Of course, prior to that, there is a mechanism of appeals wherein somebody like a chartered accountant can represent the client in front of the income tax officers. So up to appellate tribunal, income tax appellate tribunal, chartered accountants can go and argue in favor of their clients. If the case is not solved even at that level, then as far as the courts are concerned, directly it goes to High Court. And if there is any dispute even after the High Court, then it goes to Supreme Court, which is the final, as you already know. So this is how the overall income tax law is, I would say, structured in India. Act, of course, is the core. As far as the CA Intermediate level is concerned, we will touch upon Income Tax Act 1961. Almost 70 to 80% of our contents in the entire learning process will be from Income Tax Act only. Whatever the requirements of Annual Finance Act amendments will be already incorporated in the Income Tax Act. So whatever the Finance Act applicable to us, which is now 2019 Finance Act, rates of tax according to that act we will learn, and whatever the rules which are all already mentioned will be learned also. That will be hardly there. Some particular heads of incomes like salaries will have more application of income tax rules. 1962 we will learn them. Some of the rules we will definitely touch upon. That will not be much. Majority of the portion will be Income Tax Act only. Circulars and notifications also rarely used unless they are very important or they are having a huge impact on the calculation methodology. We are not going to be too much focused on circulars and notifications. Whereas judicial pronouncements or court decisions also, we are going to apply very selectively. Very few judgments only we are going to really learn at intermediate level. Once again, you may get a doubt, why not all the things? Because income tax law in India is having all these things. That is why we have to just always keep in mind, boss, we are not learning the income tax law in 100%. No, that is the job of CA final syllabus of direct taxation. What we are trying to do here at the CA intermediate level is only a portion of the income tax law, a part of the income tax law, which contains majorly the Income Tax Act, very few income tax rules, and very few judgments, very few circulars, and of course some of the relevant amendments in the Annual Finance Act. So our scope has to be restricted to the CA intermediate syllabus. That does not mean this is income tax and after that there is nothing else. There is still a lot more which definitely will be learned by us at final level, but not now. We need to be very clear on what is our scope of learning also in that way. Now going to the next image, which has already been explained to you as part of the syllabus if you observe, and that is what is the process also. The chapters that we have is basically the process of how income tax liability has to be calculated, how total income of an assessee has to be calculated. Same thing if you just call it as chapters, these are the chapters. The same thing you call it as a process, this is the process of computation of total income. Now you can open the computation of total income image. I would suggest actually each of you to write this or draw this image at least 2-3 times so that you understand the overall process, and whenever we learn something in any of these processes, we know where we are exactly. So this is basically I would say the map. This is the map for our journey in income tax. So naturally this map we should have in brain. Suddenly we cannot open and see where are we going or not. No, that should not be the case. So we should have this map in mind. For that purpose, I suggest all of you to write this map, or I would say the process, at least 2-3 times. Then you will be perfect about what is basically it is a syllabus of Income Tax Act. What are the things? First we have to determine the residential status of a person. Then we have to classify the income under various heads. And what are those heads? Each of them is a chapter. Residential status is a chapter. Salaries is a chapter. Each of that is a head of income. Income from house property, PGBP, capital gains, income from other sources. You have different heads of income. All of them have to be aggregated, and we have to apply the provisions related to clubbing. If at all any provisions are there applicable, they have to be applied. And after applying the clubbing provisions, we need to apply the set off and carry forward provisions. If at all there is any loss, that is arising out of above computations. And after doing all this, what we get, this word is important, what we get is called gross total income. And from gross total income, we have to deduct certain deductions. And I told you already, you need to remember these words every time. What are these deductions called as? We can call them Chapter 6A deductions, or we can even call them Section 80 deductions. After giving those deductions naturally will be negative items. They will reduce the gross total income to total income. Total income is what we can also call as taxable income. And on that taxable income, somebody has to calculate the tax liability. Tax liability is different, taxability is different. Once any income is taxable, it will be included in the total income of the SSE. So the final step that we have in this diagram, that is total income of the SSE, that will only tell us whether the incomes of the SSE were already taxed or not. It will not tell us the tax liability of the SSE. That is only a calculation which will have to be done later after calculating total income of the SSE. So this is the overall process. Basically this is our syllabus also in one way we can say. In addition to this process, what else we have in the syllabus? We have assessment procedures. We have things like TDS, advance tax, return of income. Those are the only three things in addition to the contents that we have in the computation of total income process. So computation of total income is our objective, simply speaking. What are we doing in this 60 marks? What is the syllabus of taxation for 60 marks? Ultimately the objective is computation of total income. That is the climax. In order to do that, we need to do all the steps one by one. Residential status determination, heads of income, clubbing, set off and carry forward, then giving deductions. Then only we get the taxable income or total income. This is the process of computation of total income, and after this is done, tax liability will be calculated later. That's it. That is the overall process of computation of total income, and whatever we are understanding now are basically the concepts which will be required to understand the provisions of the Income Tax Act in future. That's what we are doing now. So far, we have not actually touched any Income Tax Act provisions at all. We are only talking about the conceptual aspects, terminology aspects, distinction between tax, cess and duty, distinction between a law and act, distinction between direct taxes and indirect taxes, distinction between whether one more thing that we discussed earlier. So these distinctions are what law and act, for example. So law is a bigger thing and act is a smaller thing. These are the words, terminology we are trying to get ourselves use it to. And what are the components of the income tax law in India? We observed, which include all the Income Tax Act, Income Tax Rules, Finance Act and circulars, and as well as judicial pronouncements, which is nothing but court cases. These are all the components of income tax law in India. And what is the process of calculating total income? That is a process which includes determination of residential status first, then heads of income, then clubbing, then set off and carry forward, then deductions. After that, what we get is total income. So each of them is a chapter for us. So before we enter into the Income Tax Act, all this basic understanding of the terminology is very important. With that, we can conclude the conceptual aspects of Income Tax Act or Income Tax Law, to be particular we can say. And in the next session, we will enter into the Income Tax Act and we will see some of the definitions in the Income Tax Act. Conceptual aspects are for understanding purposes. Definitions are part of the Income Tax Act. Those definitions, how do they apply in certain circumstances? All those items we'll definitely discuss in the upcoming session in relation to income tax paper. That's all for today.